Well, let's move on to the second chapter then, because that leads us on to the next topic, which is responding and identifying the customer needs.
Actually, customers are changing, and we believe that there's a new generation called C, Generation C, connected customers. So connected customers are really critical. They have different attitudes, different habits, and they use the channels or brands or the services differently. So that's why Guarantee has a great CRM systems, different segmentations approach. But on the other hand, Generation C is different. So for the connected customers, they are now growing. So we should create something different, and the segmentation models are becoming different.
I mean, the whole connected society piece is a really, really interesting point, and I had a fantastic example of that the other day on Facebook. It wasn't in financial services, but it affects us all, where someone had actually complained on Facebook. They'd posted it onto, I can't remember which brand it was now, but they'd posted it onto their Facebook page. Of course, it had all been on their friends' page. Their friends started liking it, so then their friends started to see it as well. And you could then actually you could actually follow then the company trying to respond and deal with this really suboptimal experience that this customer had had. And the connected consumer is absolutely the thing that will fundamentally change all industries in terms of the way that you have to deliver customer experience, and as you described earlier, how quickly you have to respond, because immediately it's there, it's visible, suddenly the network effect is kicking in, and you have a huge number of people seeing some of the challenges that you may have as a business in your customer experience and your customer service.
And there's a big butterfly effect there, if you don't look at that. But the other thing is, there's no demographics in this segmentation model. He or she can be 80, 90, no problem, or 18. There's no demographics. The state or the city is not important. At the end of the day, the bottom line is they are connected.
Can I add something? I wouldn't say there are no demographies. There are some, but they can be easily exaggerated. So everybody says the young are connected, etc., etc. But the fastest growing segment of the connected group are the older ones. So if you're looking forward, you can't just design something for the current relatively young, highly interconnected group. It has to also think of this very fast growing group as they take a little bit longer, or we take a little bit longer to get used to these things, but once we get used to them, we use them just as much. Another point I wanted to raise was a finding from the survey that we did across the world, 5,000 customers, was that the greatest enthusiasm for omni-channel type concepts was in the emerging markets. China, Brazil, Mexico in our case, but I'm sure in Turkey too. Less enthusiasm in the developed markets. I think it's partly because they're used to the relatively low degree of competition. But in the emerging markets, there was huge enthusiasm for anything new and innovative. So we need to bear that in mind. In the developed markets, there was particular enthusiasm, and it's very pertinent to the UK market, for the digitized, they didn't call it the digitized branch, but effectively that's what they were saying. They want a branch where they can access quite a wide range of expertise. And 83% said that's what they wanted, but over 30% were quite happy if that expertise was digitized, in other words, available only through a video or internet, some form of internet connection. But that's what the consumers expect, because they're starting to get that at the retailers, not in financial services, but in their day-to-day lives.
Something was said here that I think we need to address, and I think we've said, and many of you have said, that the customers are changing. I don't actually agree with that. And let me explain why. Is because I think financial services haven't changed in 1,000 years. I think people don't necessarily want to be rich. They want what being rich gives them. They use banks to manage their lives, not their money. And I think that hasn't changed. And people, or even young people, see a bank as a place to keep their money, to grow their assets so that they can live better lives. And I think that's one of the things that we have to keep in mind, is that non-financial services organizations are trying to integrate into people's lives by taking that financial services component into their lives. And I think what omnichannel is giving us an opportunity is take the financial services as the foundation to build into people's lives by helping them do what they want to do. But if you want to buy a large screen television, right, people have changed the way they want to do that. So they want to make a financial decision while they're standing in front of that television in that shop. That's different than it was in our grandparents' days, for sure. And that's where we really have to adopt. So the omnichannel has to be able to put people's decision-making possibilities at the point where they need to make those decisions for those types of services and products. And I think that's really where it's changed, not necessarily the desires of people.
There's a debate over one statement you made, my friend, which is that the paradigm that a personalized experience can only take place in a branch, and that us being able to touch each other and be this far apart can't be emulated in today's world. And I think that's a real threat for our thinking as we move forward. I myself live in a complete virtual world with a high definition video conference where I travel to China 3 times a week, face to face with the largest banks in China. And yes, I've met them personally and I've gone out with them, but now we have that relationship, and I think that same relationship gets established across multiple channels. Ask yourself if during the football game when it breaks, whether or not you couldn't turn, and if you could dynamically access an expert and talk about what you wanted to talk about, would that not be better than having to take time off at lunch and travel down to the branch and spend time in the branch? So if we can emulate that personal experience with information, with personalization, with knowing what you need and being able to respond what you need, I think it's unlimited channel delivery. And I think we are at a threat when we think that can only take place in the branch. And you're seeing it starting to pop up around the world, and I think that's the ultimate omni-channel vision, is to be able to deliver that level of personalization independent of where the customer is.
We talked about the demographics briefly earlier, and you said that you don't see any differences, but do you is that the case with everyone?
I think demographics and segmentation, I tend to agree with what you said. The only thing I'd like to add to that is it's not as much as the old way of creating the customer segments where one comment was by age group and things like that. It's almost like the segmentation has changed to be around behaviors, right? So my parents are 70 plus, and they are very, very connected, very, very connected. Every channel they use, they do banking, they do trading, they do everything online. So if that's any indication to go by, I'm not trying to use a broad brush to put an age group in a particular segment, but the point is that you will have different age groups which will have a mixed behavior set. So you almost need to have your segmentation based on behavior as opposed to age groups. And in terms of the geographic changes, I completely agree with your observations and findings. The emerging markets are much more digital and mobile in their usage and behavior and adoption, as opposed to some of the developed markets.
And we see a leapfrog simply. They don't have the infrastructure in a lot of cases. The cost of going out and building out the classic infrastructure. So meanwhile, they can leapfrog to a more virtualized delivery methodology.
Exactly.
And their consumers are gaining the value from it and appreciate it and aren't pushing back.
But there's something here that's also important when we're talking about segmentation and we're talking about the customers is one word: respect. We have a lot of elderly people in this country who are used to using checks as an example. It is disrespectful to them after those many years of life and support of this country to take those things away. So when we talk about omni-channel, we must also have that element of respect. As some of these channels may not be profitable, they may not be profitable, but we still have to do them because we're the banking industry and we have a responsibility to the customer. So it's not just pushing people to one channel. If they're not comfortable in that channel, you shouldn't push them there.
Absolutely.
Let them be who they are.
So inclusion, has to be a key component. You can't just look at, this is a new evolving channel, so let's put all our eggs in one basket. You just can't do that. I agree with you.
brings us to our final question for the second chapter, which is, what incentives are there, and you touched upon it a bit, to accommodate a customer's preference for a particular channel?
My opinion is that if you offer a compelling experience, irrespective of whether it's one channel, 5 channels, whatever it is, it's the legacy channel or a new one, if the experience is compelling, if it's easy, if it's simple, then you will see high adoption, irrespective of whether the person was used to using checks in the past or mobile, in today's world. If the experience is not compelling and it's just one additional piece that we add to the puzzle and say now migrate to this one, even though it's clunky, then it's not going to happen. So I would almost flip it and say, rather than say you can either choose from A versus B, as long as the experience is compelling in the newer ways of delivering the service, you have a likelihood of people migrating on their own. And I'm not suggesting stop the legacy way of doing it. If people are used to doing checks, make sure that you are including and not excluding that customer base.
I'm sorry, I disagree fundamentally with the premise of the question. If the question is, how do we get customers to move to new channels or to low-cost channels or whatever, I think that is the wrong question. The question is, how do we go to where they are? Right? And we can't, I don't think the brands in financial services in the current economic environment are strong enough that they should even try to move people to new channels.
I mean, it was the old style. That was definitely
That was
it was the old what we'd call transaction migration, because it was like, the ka-ching in the eyes, and it cost this amount to service a customer in the branch, and then to do that same transaction on the internet was, fraction of the cost. So let's migrate all of those customers across into the branches. I think that has definitely been disproven as a strategy. Not only because effectively when we looked at the data, we found that actually the customers that used more channels were actually far more valuable and far more profitable because they're far more engaged with the brand and so on. So I fundamentally agree. It's not. I mean, originally, back in the sort of late 90s, the banks were all really excited about transaction migration. But now, I think the banks have come out the other side of that and seen that actually the value is in terms of actually being able to engage effectively with the customer at all the touch points and give the customer a fantastic experience at those touch points. And that's really what will drive the value out of the business.
Products possibly need to be redesigned for some of the newer channels, because most products have tended to be designed for a branch environment and the process which can easily be followed at a branch. If you take something like a mortgage, it tends to be quite a complex process because it's designed to be shown in a branch. Therefore, if you want to encourage use of digital and cross-channel, you've got to think rather carefully about the product design and the supporting processes. Do they support that, or do they need to be relooked at?
Actually, we sold 1.8 million products last year via digital channels. 1.8 million means, it's a very big number for a mid-size bank. And Garanti is one of the biggest banks in Turkey. But the thing is, if we wanted to sell these products, like, the regular ones from our channels, because they were for, brands, and it wasn't possible. So that's why, we created a different, unit to create new products or digital products, not the regular ones, to sell our customers or to give this service. And the one more thing about the migration, this shouldn't be a mandatory migration, not in terms of transaction. There's one example here, the physical touch is important. Why? Because people want to see the portfolio manager in the branch. That's for sure, because seeing is believing. But another thing is, if you put a portfolio manager service onto your internet banking or mobile banking and put the video service on it, if someone can see his or her product manager, a portfolio manager, on the video, this is something else. This is just a step. But if we can do this, Garanti has some similar things. But if we can do this kind of stuff, then the experience will change, and it's not going to be mandatory.